Hello, good evening, everyone. Thank you so much for joining us for tonight's webinar on Relax with Tax for Creative Freelancers. My name is Vanessa Quintero, and I'm the Educational Programs Coordinator for CLA's Los Angeles office. Today's topic is very informative, and there are many artists, freelancers, and arts administrators in the audience with us this evening. Before we jump into our webinar, I would like to share a bit about California Lawyers for the Arts. California Lawyers for the Arts is a statewide nonprofit organization serving the arts community by providing a number of legal and educational services across the state. To share a bit more about our programs and services, I'd like to play a brief video from our Executive Director, Alma Robinson.
Hello, my name is Alma Robinson, and I am the Executive Director of California Lawyers for the Arts. CLA is a statewide nonprofit organization that was founded in 1974 to serve artists and arts organizations of all disciplines with advocacy as well as services that provide support with legal and business issues. With staffed offices in San Francisco, Berkeley, Sacramento, Los Angeles, and San Diego, we provide several core services. First, we provide legal counseling to specialized attorneys who provide assistance with a variety of intellectual property questions, as well as contract reviews and negotiations and other important business issues. Depending on the client's financial status, legal assistance may be available on a pro bono or reduced fee basis. We also provide a specialized program that assists independent inventors and small startups with their patent applications. To help with situations involving disputes, we provide a range of alternative services, including negotiations counseling, mediation, and arbitration that can avoid the expense and hassle of going to court. Finally, we offer a full menu of educational programs that include workshops, symposia, and conferences on various legal topics for artists and arts organizations. Many of these programs are posted on our YouTube channel, and we encourage you to use these tools to educate yourself on the legal issues before you reach out for specialized assistance from our organization. Thank you for joining today's program, and please consider joining CLA on our website at www.calawyersforthearts.org so that we can continue to maintain our full range of services. Thank you.
CLA is also on various social media platforms. Follow us on social media to find out about our upcoming workshops. Now, I would like to go ahead and get us started with our workshop. Jeff Thompson is an actor, writer, magician, and tax professional from Los Angeles. He is a partner at Thompson, Cherry and Associates LLC, which serves over 1,000 clients, mostly in the entertainment industry. In addition to preparing taxes, he also teaches improv at the Westside Comedy Theater, teaches psychology at Citrus College, helps run the Ruby LA, and produces short films with his production company, Great Hair Productions. Welcome, Jeffrey. Thank you so much for preparing this information for us.
Of course, happy to be here. So I've been doing this for 10 years and every time it is delightful. This is called Relax with Tax. So if you haven't gotten your drink or substance of choice, I'll give you time to grab a glass just so that you can be in full relax mode. Just to give you a brief outline of what we're going to cover today, I'm going to introduce myself and the lecture, which is what's happening right now. We're going to talk about some of the weird things that are specific to this tax year, the 2021 tax year, which we take care of in 2022. I'll give you a nice little understanding of how taxes work, because a lot of us just kind of like do it, but don't really understand what's happening. So I'd love to elucidate as I can. And then I'll cover some things related to business income, specifically related to creative artists. So a lot of that freelance stuff that we deal with day to day. So hopefully it's fun. And if it's not, I'm going to cash in that $50,000 check that I get every year for doing these lectures. I make more doing this one lecture than I do any other thing that I do. So, I'm contracted for 10 years. Oh no, if I mess up, they won't bring me back. Okay, so I have to do a really good job this time. Otherwise, I won't be able to just rest on my laurels and just do this one lecture and not work for the rest of the year. Literally after today, getting on a plane, going to Cabo. So yeah, that's the warm up. Now that I've made you laugh at least once, I could just be dry and boring for the rest. So one thing to mention is, unfortunately, this is not a comprehensive tax lecture. I cannot cover everything in taxation, nor would you want me to, unless maybe some of you are really interested in how taxation of farms works. And you're like, well, is there a difference in how I depreciate a cow if it's like being raised to be used for beef or if it's being raised as livestock? And the answer is yes, but I do not have time to explain why right now. So what I'm doing is giving you some of the highlights, but obviously, there are going to be things that are unique to you. So I have made sure that there's enough time to answer those questions while still giving a nice general overview. So one thing that I think is really important. So a lot of people probably saw those letters after my name and you're like, what does EA mean? What's an enrolled agent? Shouldn't I be being lectured to by a CPA or tax attorney? So EAs are kind of like the ignored stepchild of the tax preparation family. Very sad for us because oftentimes people are like, oh, I need help with my taxes. Are you a CPA? And I'm like, no, but I am licensed by the Department of the Treasury to help you with your taxes. And they're like, oh, I really need a CPA. This is a really tough situation. I'm like, yeah, but my training is in taxation. The people who you write a check to when you pay your taxes, that's who gave me my licensure. That's all I do. I study taxation and no, I think I need a CPA. And then, whatever. So what an enrolled agent basically is somebody who is licensed by the Department of Treasury. I had to take a 3-part licensure exam to represent taxpayers before the IRS. So in addition to preparing taxes, if you were audited or having to do an appeal or deal with collections, or if you just got a really annoying letter that you don't know how to deal with, I can, in addition to preparing your taxes, help you out with that. But also CPAs and tax attorneys can also help with that. We all have our different specialties. Tax attorneys are going to see things from a more legal perspective. CPAs are going to have a stronger accounting background. But when choosing a tax preparer to help you, there are lots of things to be aware of. Least of all is the person's credentials, because there are some really great CTRPs, California tax return preparers, who aren't EAs, CPAs, or tax attorneys who can also do a great job with your taxes. So one question that I often get is, or actually no one ever asked me this, but I just pretend that people ask me this so that I can say, this is a question that I often get in these lectures. I felt really bad lying in that moment. Very sorry. This is a question that I never get, but should be asked more, is do I really need a tax professional to do my taxes? And that is a great question. And it is kind of the same as somebody asking, do I need to go to an auto repair shop to fix my car? Because there are certain cases where, let's just say your tax return were an oil change. You don't need to pay somebody to do an oil change for you. But if you, one, don't want to do it, and two, want somebody who will probably do it quicker than you can do it, then you pay someone to do it. And that's the case with tax returns, right? I cannot guarantee, if you just have one W-2 and that's your only source of income and there are no expenses, no itemized deductions, if you do it in TurboTax and I do it in my tax software, we're going to get the same numbers unless somebody makes a typo. So there's no need necessarily to do it if your goal is, I just want to get the best return. You can do that, right? But sometimes people just I just have some clients who just don't want to do it. They send me their documents, I prepare it, it's done, right? So at the very least, if you're finding someone, know that the thing that you're paying for is that your returns will be prepared properly, right? Now, there's this nice sweet spot where if your returns are relatively complicated, you have someone who can walk you through the difficult stuff. So sometimes I have people who just don't understand why they owe. And I go through everything with them, and then I explain that. And I say, well, you can make this adjustment to your W-4, you can make estimated payments, those types of things. So the nice thing about having a tax professional is usually you have someone, and I say usually because some people find people who are way too busy and can't answer any of their questions ever, which isn't great. But, ideally you want to have somebody who can like walk you through the things that like do not make sense. So when looking for someone, you should ask what their credentials are, and they should be able to tell you, oh, I'm registered with CTEC, or oh, I'm a tax attorney, or oh, don't ask questions. I do tax returns out of the back of my truck. Probably don't trust that person. There should be somebody that you feel comfortable with working with, and an accountant should feel very similar to dating, not in the romantic sense, although I did like wear like a nice shirt and jacket just for you, putting a lot into this relationship, and I don't feel like you're doing the same, sitting there eating marshmallows out of a paper bag in your sweatpants. Like, am I just the only one putting any effort into this relationship? Like, I love you, but like sometimes I don't love parts of you, There's one person who was like eating marshmallows out of a paper bag who's just like, how did he know? I don't know. So trustworthy, right? They don't need to be your best friend. They don't need to be as funny or talented as me, but they should be somebody who, like, when you're around, back to the dating thing, like if you're around them, you should feel comfortable. If you feel like they're always talking down to you and they, like aren't treating you with respect, then you probably shouldn't be giving that person your money. Now, I feel like a little bit of a hypocrite because sometimes I do talk down to my clients, and let me tell you why. Let me explain why I do this. Because if I send you something in an email and then you say that I never told you, but 3 emails previous to that, I said it, I'm allowed to be upset. If you disagree with me, let me know. But I do feel like if I say something in an email and you could have just scrolled up and read that email and saw that I said that thing, I'm allowed to go, just so you know, my previous email, I did mention this thing. It was just one sentence in it. Like, am I a bad person for being just a little bit of a in that situation? Let me know. Let me know in the comments. If you disagree, if you're like, Jeff, people don't read emails, why are you so angry? Fine. Okay, I'll allow it. But I think I'm okay with that. So find someone who you trust. Do not trust anybody who makes you guarantees. I will never, without looking at a client's documents, guarantee that I can get them a return, because there are some people who, no matter what you do, are going to owe money. If you made $1 million, first of all, if you made $1 million and you were complaining about the fact that you have to pay taxes, come on, you're doing okay. You'll be okay. Even if you were left with $500,000, you would be okay. So, but if you made $1 million, you'd have to pay some taxes. Unless you spent all of it on business expenses, you would still have to pay some taxes. So nobody should, without looking at any of your documents, say that they can guarantee that they can give you a better return. I never guarantee that. I guarantee that I'll do my best, and I guarantee that I'm very good at my job, which is why I have a crap ton of clients, or just, a few hundred people that feel very sorry for me, and they're like, let's just pay Jeff. He's got it hard. I don't want him to have to like try to get like a different job. He couldn't handle like a construction job. His hands are too weak. Just let him type, click, clack away. So people who make guarantees, don't trust them. And also find someone who, within reason, will take the time to answer your questions. Do I pick up the phone every time a client calls me? No. Partially because most of the time when a client calls me, I am actively working on a return or in a call with someone else. The other partially is because sometimes people call me at 11 p.m. on a Sunday. I'm not working at that time. I'm too busy realizing that I forgot to watch Last Week Tonight with John Oliver, so I'm catching up on that. So those are the things that you want to look for. Can I trust this person? Is this person over-promising? And is this person available to like make me feel more comfortable about what's going on with my returns? And also, do they have some like licensure? Are they legally allowed to prepare tax returns for money? So now we transition into our fun section. Weird stuff about this tax year. So one thing that I want to let you know is, if you have not read the news, I'm not sure how many of you see an article about the IRS and like, ooh, that's something I want to read. But there is currently a backlog, and I've seen this number go up and down. But this is the thing. the number is over 1 million. So there's a backlog. I found an article that said there are 10 million individual returns and 4 million business returns in this backlog. And that is not a fun backlog to be in. I have had clients who have sent stuff in last year and it still hasn't been processed. How do you avoid not getting in that backlog? To some degree, some people are just going to be very unlucky, but here are some things that you can do. Make sure that every document that you have that is related to taxes makes it into your tax return. If you forget about a W-2, if you forget that you had covered California, if you say that this has been happening a lot, people got the third stimulus check, the one for $1,400, and then they say that they didn't receive it. And this happened last year because there were in California, 5 different stimulus checks that you could receive. So some people didn't think that they got one because they got a payment card, not a check, and they thought it was a different thing or for whatever reason. And so if you say that you didn't receive it when you actually did, then that has to be pulled out of the automatic processing and somebody has to go and figure it out and then follow up with a letter, which then you have to respond to, which takes 2 months for them to respond to your response. So there are lots of things that you can do to prevent yourself from getting stuck in that queue. So if you want your return to be processed quickly, make sure that you take the time to, especially if you're working with a tax person and they send you a client organizer or they ask questions, double check and make sure that you're giving them the correct information. There have been so many times where I've asked somebody, did you get the third stimulus check? And they say, no, I didn't get it. And then I say, can you please double check for me that you did not get it? And then they're like, oh, actually I did get it. And then I go, well, I'm glad that we figured it out because had we not, your return would have been stuck for at least 6 months. So that is how to make your life so much easier. So as I mentioned, one of the weird things this year is the economic impact payment, number 3, or the third stimulus check. So depending on your income and depending on whether or not you're married or how many dependents that you have, the amount that you receive will be a multiple of $1,400 or a fraction of that in certain cases. So double check that you received that. You should have received a letter saying how much you received. You'll want to report that on your taxes. It is not taxable. So a lot of people say, well, it's not taxable, so I don't have to report it. No, you are reporting that you received it because if you didn't receive it, then you get a credit for that amount. So if you only received 700, but you were actually entitled to the whole amount, then you would get another $700 added to your tax return. But if you don't report it, then you're reporting that you received nothing. So then your refund is going to be increased by $1,400. But when the IRS system checks, they're going to say, oh, they said 0 when they actually did receive it. And then it's going to be taken out of that system for the processing. And you don't want that. Or maybe you do. Maybe you're just like, the IRS can keep my refund. The other thing is the child tax credit. If you have children, then you probably received this, but different people receive different amounts. And if you are married, then let's say you received the total $3,000, then your spouse would receive something saying that they received $1,500 and you would have received something saying that you received $1,500. Sometimes I've had couples who one spouse receives theirs and then the other spouse receives their letter a week and a half later. So I'm like, did you receive that money? And they're not sure. One person still hasn't received theirs. So it's just important to know how much specifically you received, so that, again, the IRS has made things very hard. But if you are a child-having person, then make sure that you report the accurate amounts so that you can not deal with any annoying delays. This year, you may remember last year, if you received unemployment, that you could deduct $10,200 and not pay any taxes on that amount. Nothing like that for this year. So the full amount of your unemployment is taxable for your federal returns, not for your state returns. But another fun thing is that you may know that charitable donations are an itemized deduction. So usually if you donate $50, $100, to a charity, then you can itemize it, but most people don't get a deduction because it doesn't like meet the standard deduction. This year, if you are an individual, up to $300 that you donated to a charitable organization is deductible directly on your tax return. So you can take the standard deduction and deduct up to $300. And that is also doubled if you are married filing jointly. So, and that's pretty sick because we haven't been able to do that in a very long time. So this doesn't include like GoFundMe. This doesn't include like if you like brought, clothes to Goodwill or donated like furniture to the Salvation Army. It has to be actual cash donations. Those can be deducted directly on your tax return. There's this weird law for people with S Corps and partnerships where you can deduct your state taxes paid directly on your business tax return. If you are one of those people, you should have a tax accountant who knows about that. And they have probably done a lot of math in order to figure out if that works for you, because that whole law, AB 150, if you're curious, takes about an hour to explain how it works. I'm not going to talk about it, but for those of you who have partnerships or S Corps, know that there is a potential tax savings there for you, and that does need to be claimed by the 15th of March if you want to claim it for this year. Last thing in the updates for this year, cryptocurrency. We love it, and the fun thing about cryptocurrency is that in some ways, the government doesn't really know what to do about it, but in other ways, the IRS knows exactly what to do about it, and it's to treat it as if it's any other type of security being traded. So one, if you buy, sell, trade, acquire cryptocurrency in any way, you have to state that on your tax return. There's a box that says yes or no. Even if nothing is taxable or reportable for tax purposes, you have to disclose whether or not you have any cryptocurrency. When it comes to, so a few people may have bought cryptocurrency through like something like Robinhood, and they will give you a 1099-B, which breaks down everything that is reportable for tax purposes. Unfortunately, some of the like smaller or fringe coin trading systems don't generate something so neatly. So if you've been buying and selling a lot of crypto, there are going to be external services that you'll need to use in order to translate that like huge Excel sheet of data that you'll have from the year into something that you can use to report the gain and loss accurately. So if you have a tax person that you're using, which I do recommend if you're dealing with crypto or like large stock trades in general, because I deal with 1099-Bs all the time. I wish I didn't have to, but in the past 2 years, everybody like wants to trade stocks. So I see like in 2020, I would see like 3 a year. Now I see like 100. So everybody during the pandemic was like, I'm going to trade stocks, which is great. Great for them, terrible for me. A lot of pages, a lot of paperwork, but make sure that you are reporting everything properly. And if you are operating at a loss, even better, because then you have a nice loss to deduct against the rest of your income. So now let us talk about how taxes work. So when you are looking at a Form 1040, which is the form that you file your tax returns on, it is broken up into different sections, and things are coming from different areas. So in addition to the Form 1040, you also have 3 schedules that are numbered, 1, 2, and 3. You also have things like Schedule A for your itemized deduction, Schedule C for business income and expenses, Schedule B for interest and dividends, Schedule D for capital gains and capital losses if you're selling a lot of stock. So there is a fair amount of stuff going into it. And what people sometimes don't realize is that taxes aren't like a buffet where everything is separated. Taxes are like a big stew. So let's say you have a lot of W-2 income, but you also have a business that lost money during the year. So even though you cannot make deductions against your W-2 income, you're not lowering your W-2 income. If you have a business loss during the year, let's say $10,000, then when you're looking at your total income, you may have heard the term adjusted gross income, those two add up together in order to determine how much of your income you were actually taxed on. So it's really important I have clients all the time who are saying things like, oh, my business lost money, so don't even worry about I don't want to even go through the trouble of getting you all those expenses. I lost money this year. I'm like, no, give me those expenses. They're really important. Unless you just want to pay taxes, then the IRS will take your money. But those business expenses are really important. So you want to make sure that you are going through everything and understanding how all these things may affect one another. So the five general categories are income, adjustments to income, deduction, taxes, and credits. And all those things go into the computation of how much I actually owe. So your income, those are things like wages from W-2 jobs, interest and dividends, any income from an IRA, a pension, a security, capital gains and losses from selling stocks, unemployment income, if you are renting out a guest house or a room or something like that, or doing an Airbnb, rental income, and then let's say you win a game show or something like that, that type of income, miscellaneous income that you might get from other sources, and also, of course, business income. So one thing that pops up a lot, a weird misconception. So a lot of people in the entertainment industry, maybe you work as a producer or a makeup artist and you get a kit fee. Those reported on a 1099 miss for miscellaneous. Those actually do count as taxable income because you're being paid for the rental of your equipment. That's different from a reimbursement, which is not taxable. So a few people have been surprised to find out that that amount is taxable, but it's not business income. It is other income, so you're not paying self-employment tax on that amount. But you take all of that income and then you add it up, and then that gives you your total income or your gross income for the year. Then you have adjustments to that income. Adjustments to that income are different than business expenses. They're also different from itemized deductions. So these are things like if you are a K through 12 teacher, you can deduct up to $250 in unreimbursed supplies on your tax returns. If you contribute to an IRA or a SEP IRA, if you're self-employed, you can get a deduction for your health insurance that you paid during the year. And also the one that many people are probably familiar with, the student loan interest deduction. So if you paid your student loans during the year and any of that was student loan interest, then that lowers your income. So now that we've taken these adjustments to our income, we get what is called adjusted gross income, or AGI. So most of the time, when someone is asking for your income from your tax returns, they're talking about your AGI. So if you are applying for a mortgage or looking to open a new line of credit or any of those types of things, and they want to know your income from the year, usually they want to know AGI. And for most people, that's just the total of your W-2 income. For other people, that is, you might have to include some of those adjustments. So your AGI is not what you are taxed on. Before you are taxed, you can take what is called the standard deduction. And depending on if you are a single person, a married couple, or someone filing as head of household, that deduction is going to be different. So for example, if you are single, then it's $12,500. So $12,500. That's not the exact amount. It's like 12,255 or something like that. But 12.5 is easier to remember. If you are a married couple, it is 25,000. If you are head of household, it is 19,000. Now, every year, you can choose to take either the standard deduction or itemized deductions. Itemized deductions are different from your business expenses. So if, I'm a model and I have all of these great deductions or these great expenses for that. So, I paid a photographer for new shots. I updated my website and paid a website person for that. I paid commissions on the income that I made. All of those expenses are taken on my Schedule C. So those are already included when I report my business income up there at the top of the 1040. Your itemized deductions are things like medical expenses during the year. If you are a homeowner, those are things like mortgage interest, property taxes, also state and local taxes, which are referred to as SALT taxes, state and local taxes, charitable donations, in case you contributed more than the 300 and you wanted to deduct them that way. Those few things, if they exceed the standard deduction, you can itemize those deductions. So let's just say it's your first year of a mortgage. You bought that $10 million house up in the hills, and the mortgage interest that you paid was $30,000 this year. Well, instead of taking the $12,500 standard deduction, you can take the higher itemized deduction. So a lot of people just take the standard deduction, but a lot of people choose to itemize deductions if it makes sense for them. But for most people, the standard deduction does the job. I'd say about 3% of my clients end up itemizing their deductions. And usually it's for people who are homeowners, specifically homeowners in California, because the cost of property and the property taxes are incredibly high. So your adjusted gross income minus your deductions gives you your taxable income. And your taxable income is pretty straightforward. If you make $50,000, that puts you in a specific tax bracket, and that determines how much tax you owe based on your income. So for most people, it ends there, but there are other taxes that some people might deal with. So for example, there's a self-employment tax. If you have a business, in addition to income taxes, you also have to pay into Social Security and Medicare. So a portion of your business profits are also taxed to contribute to Social Security and Medicare. That's about 15%. And then also, if you have covered California, you might be familiar with the fact that you can get help with your premiums that you pay. That's called the premium tax credit. So you may pay a lower premium month to month because of your income. But if your income changes, goes up or down, then that may be charged to you as a tax at the end of the year, or refunded to you as a credit against your taxes. So then you figure out your total taxes, then you add in any credits that you may be eligible for. So for people who are in lower income tax brackets, you are eligible for the earned income tax credit. There are also education credits, such as the lifetime learning credit and the American Opportunity Tax Credit. So if you are in college or grad school, then you can, or even if you're just taking classes to improve job skills, you may be eligible for some of those credits. So the amount that you paid in tuition can help reduce what you owe in taxes, even if you took out student loans to pay that. If you have children, then you're probably familiar with the child tax credit, which is just automatic if you claim your children as dependents. And then also you have the dependent care credit. So let's say that you paid a babysitter, $1,000 during the year to take care of your kids so that you could go to work. Well, then part of that is then refundable as a credit on your tax returns. There are also credits for adoption. And then you may also be familiar with the credits for, having like an electrical or purchasing an electrical vehicle or purchasing a plug-in vehicle, right? So you have your taxes, and then if you have any credits, that lowers the amount that you have in taxes. And also during the year, a lot of us, if you have W-2 income, will have taxes that are taken out of your paycheck. So if those taxes are taken out, then that means that they've already been paid. So let's just say during the year, you had $11,000 taken out of your paychecks for federal income taxes. It doesn't count if it went to Social Security or Medicare, only your federal income taxes. You had 11,000 taken out. We look on your tax return, we calculate everything. It says that you owe $10,000. Well, if you owe $10,000, but you paid $11,000, then that means, that's right, that you got a refund. I'm glad everybody said it at the same time. Thank you for saying it. So you get a refund. Now, if it said that you owe $10,000, but only $9,000 was taken out during the year, then that means that you owe $1,000. So this is what I mean, where sometimes there's not much that we can do, right? If you only had one W-2 job during the year, and that's your only source of income, and taxes weren't taken out enough paycheck to paycheck, then what ends up happening is you owe it back at the end of the year. So, but then, let's say that you have a business and you forgot that you bought a new computer for your business. Well, that's going to lower your taxable income, meaning that it's more likely that you're going to have, get closer to a refund, or at the very least, you will owe less. So that is why it's really good to have good records during the year, so that at the end of the year, you don't have to do a lot of fishing to try to remember like all of your purchases that you had in January. I'm sure a lot of us have done that thing where we've gone through bank statements to find things. It's not fun. Why do we do it every year? So it's really helpful to keep track of things as they occur so that at the end of the year, everything's organized in there. So that is the tax prep in a nutshell. We're organizing everything, we're figuring out what all the numbers are, and then we're just making sure that the things that you're eligible for. So, for example, you might know that you can still contribute to your IRA until the tax filing deadline of 4/15. So, and I know some of you are going to go, well, isn't the deadline extended until the 18th this year? Yes, but I'm pretending that it's 4/15 because I don't want to work on the weekend. Is that bad of me? Yeah, probably. So there are things like that where you can figure out like, oh, I am eligible to do this thing, or, oh, like I paid for health insurance through Covered California. I have a business and that business was profitable. I can take the self-employed health insurance deduction. So those are, oh, and one more thing, because I do get this question a lot about estimated taxes. So estimated taxes basically do what an employer does when they pay you a paycheck. They take out taxes every time you get paid, send it to the IRS so that when you file your taxes at the end of the year, you don't owe a huge chunk of money. So essentially, if you owe, let's say you file your taxes this year and you owe $1,000, right? Instead of waiting until next year to pay $1,000 again, assuming that all of your income is the same year to year, what you can do and what you should do is you can pay, and they're technically not quarterly taxes because they are due April, June, September, and January. So not technically quarterly, but you can pay during those 4 periods $250. So by the time next year, when you owe that same $1,000, you've paid what you owe. And if you know that your income is changing drastically year to year, so let's just say, tomorrow you get a job that pays you $100,000 and you're like, wow, that is the more money than I was expecting. You can figure out how much you're going to owe as a result and then adjust your estimated taxes. But the bare minimum that you should be doing is taking what you owe in the previous year and paying that during the year so that you aren't repeating that, because you are then penalized for not making those estimated payments. It is funny because the penalty for not making estimated payments for a lot of people is extremely low. Oftentimes I see penalties of like $20. So off of like a debt of like $2,000. So for most people, they're just like, I don't care, I'll just pay the penalty. So, and that's up to them. But for those of you who are curious, that is essentially what estimated taxes are doing. You won't go to jail for not doing them, but you will deal with a penalty. Why give extra money to the IRS if you don't need to, unless you're like, hey, the IRS deserves to be able to buy three copies. So one annoying thing about being a creative is that you get W-2s and you get 1099s, and sometimes it's very confusing because, as you might know, because of the Tax Cuts and Jobs Act of 2018, you cannot deduct expenses related to being an employee. So, I go to my 9 to 5 and my boss is like, hey, everybody needs to have their own laptop just for work. We're not going to reimburse you. You have to pay for it yourself. So I pay however much laptops cost. I have a tablet that I use for editing, so my cost of the laptop is different than other people's, but let's say $1,000. So you cannot deduct that anywhere. You can try to deduct it on your California returns, but more than likely you won't be able to deduct that on your taxes, which is really annoying. It really sucks. But let's just say I had a different job where I was a freelance editor and I bought that $1,000, and any editors are like, $1,000 for editing. I bought that $3,000 starter editing rig. I would be able to deduct the full amount during the year. Now, sometimes what happens is we have expenses that are used for both. So either work and business use or business and personal use. So in cases like that, you want to figure out a fair percentage. Now, how figuring that out works is between you and the deity that you choose to or choose not to believe in, but you want to have some like basis for that. So one thing that people do, and this is often the easiest thing to do, where, let's say I make $50,000 from an editing job that pays me as an employee. I make $50,000 freelance as an editor, so 1099 work, cash, etc. Since half of my work is related to business, I can deduct 50% of the cost of that computer that year. If it were 70 business, 30 employee work, then I could deduct 70%. So things like that. So now I'll just go through the list of expenses, just so you have an idea of what things are common in our industry, as well as some of the weird rules about some of them. So one, mileage. So anytime you're doing any driving for 1099 work or any work that you're not directly being paid as an employee for, you can deduct that mileage. You want to keep a mileage log during the year. There are lots of apps that will help you do that. If you are audited, the IRS is going to want to see what's called a contemporaneous mileage log, showing your mileage day to day. Weirdly enough, I just found out that Google actually I've heard that Google does this, but like you can actually, if you have like a phone with Google on it, it will show you where you've been every day. And it was cool. A little scary, but cool. Because if the IRS was ever like, did you really go to this place during this day? I'll be like, yeah, let's open up Google and just see July 13th, I was at the murder scene. Uh-oh. And then they're like, oh, don't worry. We're not murder people. We're just auditors. You just owe us $50 in taxes. I'm like, whoo, dodged another bullet. My victim didn't. I probably shouldn't say this during a California Lawyers for the Arts, because there's some attorney who's just been waiting to nail me. They're the prosecution. They're like, we got him. He said that he did the murder in the.
Bake him away, toys.
I've been watching too much Law and Order, guys. I'm sorry. So mileage, easy deduction. Then we have advertising, business cards, postcards, brochures, if you put on a play bills, websites, all of those expenses. Any casting sites that you subscribe to, Actors Access, Casting Frontier, any of those sites that help you get more work, if you that type of thing. Commissions that are paid during the year. Dues can be a little bit weird because they're both related to W-2 and 1099 income. So you will have to figure that out each year as you're looking at your income. Parking, but not parking tickets. Meals for business. So a lot of people try to abuse this. Like if you're my best friend and we hang out and we're grabbing lunch and you ask me one tax question, that doesn't mean that you can retroactively write off that meal. It's very hurtful when people do that, because I feel like they're just using me to get free food. So it has to be a meal with a specific business purpose. So if you're like, hey Jeff, I have a bunch of tax questions. I'd love to take you out to your favorite Thai place and ask a whole bunch of tax questions and pay for dinner. That is deductible in your taxes. Or if you have like an agent or manager or potential client who you want to wine and dine a little bit, that is deductible. Just so you know, entertainment is not deductible. So if you take somebody to a basketball game or a play or something like that, not deductible. Research expenses are a fun one, but also one that you have to be careful not to abuse. So obviously, sometimes as artists, we want to know what other artists are doing. So let's say you were writing a superhero show or movie and you wanted to see some like recent superhero movies. So you go down to Blockbuster and you rent some VHSs. Everybody is now calculating my age and now you have it within 3 years. I'll drop a couple more hints and then you'll be able to figure out how old I actually am. So those Blockbuster VHSs that you got would be deductible, or if you rent something through like Amazon Prime Video or like something like that. Now, when it comes to things like a Netflix subscription, it really is going to depend person to person, because I have some clients who are like, I bought Paramount Plus just because I was watching these specific shows that I was writing on. So business expense. There are other people who are like, well, I have Netflix, and like sometimes I watch it because like there's like a, movie that was nominated and I want to watch it, and other times I'm just watching Love is Blind season 2, which who's been watching? Everybody? Great. So that's personal. And that's what I mentioned, where sometimes things are personal and business. So we would just figure out what a fair percentage to take of that is. Some of my clients do 90, some do 100, some do 10. It depends person to person. You could also look at a portion of your cell phone. If you're using your cell phone for business, if somebody else pays your cell phone bill because you're on a family plan like I am, I'm going to be 60 and still on that family plan. My mom better keep on paying it. So unfortunately, you can't deduct it because you got it for free. But if you are paying your own cell phone bill, you can look at a portion of that related to business. Classes and workshop, travel, any equipment purchases, computers, cameras, lighting equipment, for those of us who have like VO setups or editing bays or studios that have, lots of stuff, any equipment and supplies that you buy related to your 1099 work are deductible. And then also any like office expenses or software. So I have Premiere on my computer, I have Final Draft. Every time I pay those, deductible, right? Anything that isn't related to work. So, Elden Ring is not a business expense. I do not use that for work. So I use that for feeling miserable. So there's also what's called the home office deduction, which is a weird one. So essentially, if you're a business and you have a part of your home exclusively used for business, you can deduct the proportionate cost of that on your tax returns. So the tax laws are kind of like outdated in the fact that like they assume that everybody like has their own home. So, if you have roommates, it's very hard to figure out like, well, what percentage of your home is yours and what percent is used for business. So the calculations get a little bit weird. But let's just say you live by yourself in a 2-bedroom because you are rich, and you have a room that you do not use for anything because you are rich, and you are like, I'm going to turn that into an office for my business, right? So let's say the square footage of that office is 200 square feet. Your total home is 1,000 square feet. The rent that you pay during the year is $24,000. 20% of that is $4,800. That will be a deduction on your tax returns. Your utilities are $2,000. 20% of that is $400. But you can only take that deduction if your company is profitable during the year and if you have a business. Unfortunately, a lot of us during the past few years have had to turn our homes into our offices for our W-2 jobs at great expense to ourselves. And unfortunately, that is not deductible on your tax returns. If you want to be upset, blame whoever was in president when the Tax Cuts and Jobs Act was passed in 2018. I think it was Obama. Thanks, Obama. Ugh. So rent and lease. So if you're, shooting a film project and you rent a camera, or if you're putting together a play and you're renting a studio, or if you are, putting together a huge art project and you have like a studio that you're renting for that rent would be deductible. Then any contractors that you pay during the year. Remember, if you pay somebody more than $600 during the year, you do have to file a 1099 NEC, and that has to be filed by January 31st. So that's an easy thing to forget. So before you pay anybody, always just get a W-9 from them, just so that at the end of the year, you have everything that you need to file those, because sometimes people don't want to give you their information, and trying to track it down is the worst. And then other things are like bank fees, legal and professional fees. So if you have to pay a lawyer, if you have to pay an accountant, although personal tax prep fees are not deductible, as mentioned before, business licenses that you pay for, or if you have to pay, if you're in Los Angeles or any state that like assesses a city tax those are deductible on your taxes. And then gifts that you give to other people. Just so you know, you cannot deduct more than $25 per person per year. So if I give somebody a birthday gift and a Christmas gift, and each of those gifts was $25, I could only deduct 25 out of the $50 in gifts that I paid them. The things that people try to deduct and you cannot deduct, except in some very weird situations, you cannot deduct gym expenses or like haircuts, things like that, things that are considered like general upkeep. So if you are like a certain weight and hairstyle and hair color in your headshots, you cannot say I have to pay well, you can say that, but the IRS would not allow that deduction on your taxes. So I can't claim them on your taxes. So as mentioned before, no fines or parking tickets. You cannot deduct social clubs. So that Soho House membership is just for fun. Unfortunately, not deductible. No entertainment. So you can't deduct taking people out to baseball games, theater shows, etc. You cannot deduct the donation of your time and services. So, as every hour of my time is worth $10,000. So every time I give a free consultation, I get to deduct $10,000 on my tax returns. No, I cannot do that. Also, I cannot deduct general like clothing items. So even if you bought like a red polo shirt simply to do all those Target auditions that you get called in for all the time, and even if you never wear it for anything else, it's not deductible. Now, if you bought a giant inflatable T-Rex costume or a clown costume, then that is deductible. And then also no cosmetic surgery. I know everybody hates your nose, but unfortunately the IRS thinks that you are beautiful just as you are and will not allow the deduction. So professional memberships are deductible. So like if you have that, I couldn't think of any professional organizations in that moment, but those are deductible, and annual subscriptions for software and trade magazines are definitely deductible. So when it comes to meals while you're working, those are not deductible. They have to be a business meeting. Although if you are traveling away from your home, so let's say you're in Los Angeles, you drive down to San Diego and you're spending the night there doing a gig and then driving back, the meal that you get when you're in San Diego, the breakfast that you have in the morning, and even the lunch that you have midday are all deductible. Once you get home, once you're back in the city that you originate from, no meals are deductible. So yeah, definitely when you're traveling, go crazy on meals when you're traveling for business. They cannot be lavish, so do not go to the French Laundry, but you can like get a nice fancy dinner somewhere and take joy in the fact that you can deduct it. So yeah, but weirdly enough, and this is kind of a gray area, if you have a meeting via Zoom, and you and the person who you're meeting with both order food, technically it's deductible. There's not there have been a lot of arguments about it, but I say take it. So if you're working by yourself, no. But have a meeting while you're eating, have it in your calendar, lunch meeting with Jeff, and order that food and enjoy. But yeah, any general, things that are required for survival are not deductible. Now, if you have employees and you buy food for all your employees, or for example, like if you're on set and you buy craft services, those types of meals are deductible, but not anything that's just for you. So we are close to wrapping up. I do want to answer the question about bookkeeping strategies.
Can you offer some strategies for good bookkeeping throughout the year for business expenses and taxes?
The thing about bookkeeping is there's no one size fits all approach. What works for some people doesn't work for other people. I think one good way of figuring out if your bookkeeping system works is when you file your taxes. So ideally, it shouldn't take you that long to be able to figure out for each category how much I make, right? So if it's one of those things where at the end of the year, you have to spend an entire weekend going through bank statements, highlighting things, adding them up, and that makes you miserable, if you like doing it, that's fine. Go ahead and do it, right? What works for you, works for you. But if you're this makes me miserable, I hate it, then you want to adjust. So there are systems like QuickBooks Online and other things that people use. I use QuickBooks Online for my clients, but it is a little pricey, so it's not for everyone. You can use an Excel sheet You don't have to like be an Excel pro. You're not doing pivot tables or anything like that, but you can just make, a little tab for each category. And every month or every 2 weeks, you can go through your bank statements and then you can see everything that's business related and put it in those tabs. You can also, I have some clients who also keep track of every job that they work. So they're like, oh, I got paid by Disney through Alameda Paying Agency. I got paid through GP. So they know which W-2s to look out for during the year, right? So if, every year you're realizing, oh man, I forgot that I got paid from these 5 people and you're forgetting documents, then it might be helpful to have something that like that type of system. One thing that I recommend, if you don't mind opening a credit card that you only use for business expenses, because that means that when you're trying to figure out what's business, like you've taken out the work to some degree, because you know that everything that is on that card is business related and everything that is on everything else is personal. So you don't have to go, oh, was this time that I went and got Thai food? You can tell that I'm a little hungry right now because I've said Thai food twice. Is that one time, was that a business thing or was it a personal one? And then you had to like look in your calendar and that type of thing. And like, oh, did I meet with somebody? Maybe I did. I don't know. So if it's all on your business card, then that just makes things a lot simpler. Some people like to just keep every receipt in a separate folder and they hold on to things that way, and then they add it all up at the end of the year. You want to figure out what works for you and then make adjustments at the end of the year. I give my clients a list of all the categories that I use. And also, so for example, if you give me like a computer expense for $2,000, I'm going to need to know the date that it was purchased, as well as the percentage of business use. So some clients will keep that in like a little Excel sheet, and then they can just hand that over to me. So I have all the information that I need to do depreciation properly. So play around with different things, try things out. A lot of things will give you like a 30-day demo. If it seems like too much work and you don't like it, try something else. And then over time, you'll find the system that works best for you. And then also, as things change in your business, you may realize that like, oh, I don't need to pay for QuickBooks. I have 5 expenses every month and they're all reoccurring subscriptions. So I just know every month I'm paying $59.99 for Adobe. So at the end of the year, I know that I'm paying close to $720 in Adobe expenses. Or, I know that I pay casting networks $15 a month, So find what works best for you. How important is keeping separate bank accounts, credit cards for business versus personal for a sole proprietorship? If you're an LLC or a corporation, it's mandatory. It would be like you just have to do it, because otherwise you have no protection. If, like, as I mentioned, if you were to get sued, you wouldn't have much protection in the case that against your personal assets, because the court's going to say there's no difference between the corporation and the person. As a sole proprietorship, I say that I would recommend it because it helps you at a glance know how well your business is doing. So especially if you have lots of sources, like different sources of income, you might not realize that your business is losing you money until you file your taxes. But if you try to spend something out of a business account that doesn't have any money and you have to put a couple hundred or more into the bank account, you might go, oh, maybe I need to like rethink how I'm running my business. So is it mandatory? No. Like if it's gonna, especially if it's like a small, like really small business and you're just starting out and you're gonna be paying like $15 a month in bank fees and other things just in order to like have a separate bank account, no. But you wanna start keeping things separate, because the more things grow, the more you'll want to have that separation. And so again, it's one of those things where you'll want to figure out what works for you. So let's see, this question is a little bit longer, so I saved it. I was sent a 1099K from my online store for my sales in 2021, but looked up some info online and saw that since I'm under 20,200 transactions, I don't need to file the 1099K for the tax season.
Is this accurate?
So that is a bit of a misconception. So the requirements on filing the 1099, NEC, MISC, K, those are for the person who is paying the money. So let's say I received only $17,000. Just because I don't get a 1099K doesn't mean that I don't have to report that. So every dollar that you make, like otherwise for me, most of the money that I'd make, I wouldn't have to pay taxes on it because most of my clients pay me less than $600. The ones I don't like pay me $2,000. That is a joke, but it's a great idea. So if you want to be a jerk to me, you got to pay me a bunch more money. So every dollar that you receive, you have to report on your taxes, regardless if you get documentation for it or not. But if somebody's paying you more than a certain amount, they also have to report to the IRS that they have paid you that money. And yes, it will be changing this year. So if you get more than $600 from a third-party payment processor, so Stripe, a credit card payment company, anything like that, PayPal, then you will have to receive a 1099K. Our church tithes, charitable donations, 100%. So if you, let's say you tithe personally 300, or you and a spouse tithe 600 or more, even if you don't itemize your donations, those are deductible. This just happened with a client where they didn't list any charitable donations for the year. And then I remember that in 2020 that they tithed about $1,000. And I was like, hey, did you pay any tithes this year? And 100% they contributed $600. So that was a nice little deduction for them.
Are the profits made from selling NFTs taxable?
So NFTs, yes, when you sell an NFT, that is a capital gain. NFTs are taxed similar to how artwork is taxed. So if you bought a painting for $1,000 and sold it for $10,000, then you would pay $9,000 in capital gain. Same thing with like a house. You're not taxed on the total sale of your home. You're taxed on the difference between what you purchased it at and what you sold it for. What will be the best tax strategy for retirement plans for a solo 1099 freelancer, a SEP IRA, or a solo 401k? This is something that you would want to discuss with like a certified financial planner with. In general, a SEP IRA is easier to set up. So like I actually just set one up for myself and it was great. All I did was give them my bank account information, and you can set it up through Acorns, you can set it up through Betterment, you can set it up through so many LPL Financial, and so it's just off of the ease of use. I would say SEP IRA, but also I think the thing to consider is what your money is being invested in, because not all SEPs, not all IRAs, not all 401ks or 403bs are built the same. I'm moving stuff out of a Merrill Lynch Roth IRA because I'm making like 0.01% in appreciation every year, which is not a lot. I'm losing money every year due to inflation. So definitely, I would say that's something that you really want to sit down with somebody, talk about what your financial goals are.
Can I deduct the cost of my business license as a business expense?
Yes, the cost of a business license is a business expense.
Could you please talk about freelance artist use of employees versus independent contractors and how to avoid employment relationships?
So when it comes to being a lot of us deal with this, and it's so fun as an actor because if you do modeling, you're still a 1099. If you work for a studio, you're W-2. But if you have a loan out company, you can be paid as a 1099 through the loan out company, but they will not pay you as a 1099 as an individual. And the reason for that is because of labor laws, especially in California and other states. Labor laws are becoming more and more strict. So oftentimes you don't really have a choice in the matter. If a company says that they are going to pay you as an employee, you can't, even if you sign a contract saying that you want to be paid as an independent contractor, they still have to pay you as an employee. You cannot waive your rights away to be covered by California labor law. For a lot of people, that's really annoying, but I do want to just casually remind you that when you are an employee of a company, you are covered by workers' compensation. They pay into your Social Security and Medicare. They pay into disability, and they pay into unemployment. So if you leave that job, you're eligible for unemployment because of the work that you've done. You are also entitled to fair wages and to, like protections against discrimination. So, I know it's like cool to be a contractor, but, I am always hesitant when a company is gung-ho about like hiring people as independent contractors, not as employees, because they benefit so much by not doing so. For every $100 that a company pays an employee, they have another $10 in additional expenses just for payroll taxes and workers' comp. That doesn't even include any HR costs or additional like payroll support that they need. So it's cheaper for them to pay you as an independent contractor or to pay you under the table. And oftentimes the people who think that they're benefiting by not getting paid that way end up getting screwed over. So when it comes to being the person who's being paid, we really don't have a lot of choice. Essentially, the rule is if there is any control over how you do the work or when you do the work, or if things are being provided for you by the payer in order to do the work. So for example, office space, tools, computers. If you don't have the ability to choose how much you charge for the service, if you are under the direction of that person, or if the work that you are doing is directly related to the product or service that that company offers, you are an employee. So I have a couple of employees. One does tax prep for me. Another does bookkeeping for me. I have to pay them as employees. I love paying them as employees because I just get to talk down to them. Just kidding. I don't. They talk down to me. They're very disrespectful. They're like, pay me more money. I'm like, I don't have it. Like, I guess you're not eating this week. I'm like, okay, here, take it. But let's say I need somebody to redesign my website, or I need to pay somebody to do IT consultation to make sure, that like all my stuff is secure, because their work isn't directly related to the service that I provide. They're not preparing taxes, they're not consulting clients for incorporation or anything like that. Then I can pay them as a contractor. So that's essentially how it works in California. Different states have different labor laws, but that is slowly becoming the norm all across the United States. And there is talk about like changing federal law to make that distinction clearer, because the IRS also benefits from people being paid as employees because they get more paid into Social Security and Medicare. And that's also another thing. A lot of people focus on paying as little in taxes as possible, especially as a business, because that 15% self-employment tax is really annoying. So I pay taxes, hate it. But I think about like me at 67 or, whenever I'll be able to collect Social Security, the more you pay into it now, unless you're like 20, then it doesn't matter. You pay as little taxes as you want. But those last, I believe, like 30-ish years before retirement make a big difference in the amount of Social Security that you're eligible to claim. So even though part of the goal is to minimize your taxes, we also want to make sure that we're not screwing you over 20 years down the line. So hopefully that answered that question. So I hope that your taxes are great this year. I hope you get everything that you want. I hope that you had a little bit of fun. I hope you had a little bit of relaxation, and I hope that you learned something.
Thank you, Jeffrey, so much for sharing your knowledge with us. Thanks again, and have a good night, everyone.